Hey guys, good afternoon. It's Vinod here from GrowWealth. Welcome to the weekly market update for members and everyone who follows the GrowWealth. Today is the Sunday, the 15th May 2022. What we will do today is have a look at the stock market analysis and updates from the last week and the general market sentiment, along with the watch list that we shared last week with the members. And I have some additional bonus today by sharing with you the TC2000 scanned results that I've recently published in our blog post on GrowWealth. For more information, please look at the description below for the links for that particular post on GrowWealth page, where I have detailed about the criteria that I use for those stock screening. If you've got more information, feel free to put some comments or ask any questions on the email that you can see on the screen. Without further ado, let me share my screen to take you through the stock market analysis. As usual, we start with the CPC ratio, the put-call ratio, which is considered as a contrarian indicator. If the index is above 1.1, people are leaning more bearish, which means there's likely to be a shorter term bounce. And if the CPC index is below 0.8, a lot of traders and investors are leaning more bullish, which means that could be into a more long-term top that could happen. So as you can see in the recent weeks, this is a weekly chart. In the recent weeks, the market has been correcting quite heavily, quite badly, and the fear index, so to speak, has gone up about 1.1. However, with the recent bounce that we have seen at the oversold territory in the last few days, has brought that CPC index right to the middle of this range between 1.1 and 0.8. So it is in the neutral zone, but when the fear was a bit too high earlier in the week, it has resulted in some quite volatile bounce, as you can see in many of these stocks charts that I'm going to share, and the index chart I'm going to share in just a second. So this doesn't give us more information because it is in the neutral zone. Moving on to the S&P 500 SPX Index. When this support level from May 2020 breached, we kind of identified the February 2021 high and August 2020 highs as potential support or zones of interest. And within the following couple of weeks, that level has been hit last week. And after hitting it, along with the recent bounce that we have seen, it finished above it. It's kind of giving a pin bar candle on the weekly. So it could provide an interim support zone here and may continue a little bit of bounce or move sideways. Moving on to the daily chart, as you can see here, nice bounce, two-day bounce of 2.3% and the reversal candle here. A lot of people are still calling this as a bottom, and there are still a lot of many traders and investors, new ones that have got into the investing world in the last couple of years are buying the dip because that worked in 2020 and 2021, and they are still in the habit of buying the dip. So that means this may not be a bottom yet. If a lot of people are still leaning bullish, then the market has a habit of kind of flushing them through and wearing them off by having further down days quite drastically and can undercatch it. So, and as you can see on the daily, the index hasn't even closed above the T line yet, the 8 EMA on the daily. So that hasn't happened yet. So although it bounced, it isn't all clear yet. Moving on to the weekly. So the white line is the 8-period EMA. The teal line is the 21 EMA, and the red line is 50 EMA. And you might remember from our last week analysis, I also trying to learn and implement the Stan Weinstein stage analysis concept. And this yellow line is the 30-period moving average on the weekly to see which stage the market or the stock is in. As you can see, the index has broken below the 30-week moving average, tried to retest and failed, tried to retest and failed again. So it is clearly in the stage 4 downtrend. The same goes for the QQQ, which is the Nasdaq index, and Nysc, New York Stock Exchange index, Dow Jones index, and IWM, which is the Russell 2000 ETF. I've also started adding the FTSE 100 UK index, and it's kind of flirting with the 30-week moving average. It's got lots of utilities, defensive names, and dividend-paying stocks. And that is currently in the trend. And lots of oil and gas sector names are also in FTSE index. That is holding up this index much better than the technology-based index like Nasdaq. So it hasn't totally reached the stage 4 like the US indices have, but it's kind of flirting around the 30-week moving average on, in and out. It is starting to show some weakness recently, but the fact is fact, it is still above the 30-week moving average. So moving on to the daily chart for Nasdaq. Nasdaq has had much more of a stronger bounce than S&P 500 with 3.71% return just on one day on Friday. Let's add the other indicators to see where it compares according to the shorter term moving average, like the T line. It is still below the T line, and it is still below the support level from August 2020 high, or just around that level. So it is not a bullish signal, but as I mentioned for the S&P 500, this kind of pin bar / doji candle can lead to some consolidation, or maybe just a bit more reversal, as we saw here for a couple of weeks and before it turns down. So the extent to which the technology stocks, the growth stocks have crashed, many of them 50, 60, 70, some of them more than 80% since the peak last November, not even 1 year yet, means that the reversal is not going to be a V-shaped reversal. It's likely to be more protracted if the reversal and bottom happens whenever that happens. There is no conclusive evidence that a bottom is in yet. Until that happens, it should be understood that these bounces are all bottom bounces and relief rallies during a bear market. And don't get caught in this kind of bull trap, bear trap. It kind of bounces, people think it's the bottom, get in, and then get trapped when the market crashes again. So caution advised. Nonetheless, it is bouncing at the moment. So you'd want to look at the individual names to see whether you have some good entries or whether you want to stay safe and stay in cash. Moving on quite quickly with the NYSE, as mentioned, it's on stage 4, nothing to talk about here or here. Dow Jones and Russell 2000 has hit the previous resistance level pre-COVID high from January, February 2020. It hit that and found some support level, which also coincides with this gap up. So that zone is acting as a support right now. And it did also have some strong bounce of over 3% on Friday and more than 1% on Thursday. But the bigger picture on the weekly is clear downtrend still. It's a little bit different, as you saw on the FTSE 100 index. Bitcoin and whole of crypto space is not doing any better. There were various horrifying news on the crypto world with the project Terra. The ticker name for the coin is Luna, has gone from over $100 to zero in a matter of few days. A lot of people have lost a lot of money. I'm hearing rumors that people have lost their life, taken their own life. I have lost some money in that. Crypto still remains a highly volatile space. But the big projects like Bitcoin and Ethereum are holding much of their grounds compared to the other ones. It's still nonetheless in the downtrend. And if you look at the stage 4 analysis using the 30-week moving average, the stage analysis using 30-week moving average, it is in stage 4. Moving on to Shell. So these are the stocks that I've identified as bucking the trend and could be used as a watch list with caution, because if the setup fails, then you would have to kind of immediately get out. The market is not very conducive for short-term swing trading. Nonetheless, if you do want to invest, it's best to identify which stocks and sectors are performing well, showing some relative strength in this real bad market, and try to see if you've got a good risk-reward entry point, if you're good at trading and being nimble. If not, just watch and learn and wait until the market settles down into a proper base and then get into an uptrend whenever that happens. So staying with our theme of weekly analysis, let's stay with the weekly chart for now. So nice uptrend, stage 2 shell. It's continuing. It's kind of had a pause this week, returning 0.17% for the week, but it hasn't broken down. Continuing its nice uptrend. SLL, another oil and gas sector name. So it is in the uptrend as well. There's a mini consolidation zone where it broke out of a couple of weeks ago, and it's followed through the following week and taken a pass this week. Nonetheless, it is still in the uptrend and above the moving averages. Let me add the short-term moving averages as well to see how it performs. So it's well above the 80-period moving average on the weekly. VTNR, energy stock. This has done incredibly well. So it's an uptrend, strong move here, pull back about 50%, no, 70% or so, a nice big long cup with a handle, and it's breaking out of that with over 27% return in just 1 week since it's been added to our watch list. SOI, which is the Solaris Oil Field infrastructure, and it was a little bit volatile here in the last couple of weeks, but it's in the nice uptrend. The stock had recovered all of these losses early from the week in the last couple of days and closed above this previous high there. Let's close that off. As you can see, it's closed well above the T line and in the uptrend. There are some overhead resistance in this stock. Let me add the volume to see where the volume is. But the strong high volumes are coming up on higher days compared to low volumes on down weeks. So that is encouraging that this stock has much more buyers coming in. LTHM, still uptrend, strong move following an earnings, I believe. Is that an earnings call? Yes, following an earnings. It did pull back along with the rest of the market, but the last couple of days has been really strong, particularly Friday, returning over 12.5%. Thereby, the weekly candle is moving above the 30-week and all of the key moving averages. The recent weeks, though, it's been up and down. So it's a little bit choppy on an up and down the 30-week moving average. Seems like stage 3. So you'd want a clear uptrend breaking above this level here on high volume and follow through in order to interpret this as a resumption of uptrend. But right now, you'd want to wait and see whether it follows through. ALB, similar story to the previous one, up and down. It did have the 30-week as a resistance a couple of times, but then it's had a strong move, a little bit of pause last week, but closed above the 30-week and all other key moving indicators that I use. So want to watch if the market brings in more buyers to this name. If the stock price moves above this level, then that could signify further upside in this name. NTR on the weekly, it is on the nice uptrend. Gentle pullback from its previous high to the 21-week moving average. But it's about the 30-week, still on stage 2 of stage analysis and uptrend. On the daily though, it's close below the 50-day moving average here. Try to get back above it. It's finding some resistance at 21-day moving average. So we want to see how this goes over the next few days. Just give me 1 second. Sorry about that. I had a bit of a disruption with the phone call. Back on track with the stock analysis. All right, so moving on to AMR, nice uptrend, really strong high volume days, but some of the down days are building up on high volume here as well. So that signifies there may be weakness coming into the buys. And also it's been running quite a bit for all the way from just under $5 to $149. If you just look at the 30-week moving average, going by Steinway-Einstein stage analysis method, it broke out here around when it was $4.50, and it went all the way to the current price of $160 nearly. So that is so many times return in just a matter of 1.5 years. So naturally, it's late in the run, and it's likely to show some weakness. But nonetheless, currently it is an uptrend, and it is winning close to all-time high. You can't say that with many stocks right now, so this is something that you need to be watching. And I've also included the wheat ETF last time, because this is showing some nice continuation pattern, strong up move after the Ukraine war news, pull back, and using the T line on the weekly as support, and is showing some signals that it is resuming its uptrend. No one likes war. Like most of you, I want the war ended ASAP without any further casualties. And I pray to God, and my best wishes to everyone who's trying to survive for the war to finish. The stock here, the chart here, shows a very positive bullish sign on the weekly. So if you want to play the commodity in your trading, this is an opportunity to do so. So there you go. The watch lists are performing reasonably well because we've chosen stocks on the from the sectors that is in trend and is beating the index and the whole market, showing some relative strength. So that is the way to screen and be in the stocks if you want to be invested during this time, to be in such names when the rest of the name is crashing. So stock screening is quite important. And I've also shared with my members previously with a separate post. I'll post a link to that post in the description of this video about the new stock screening method that I'm experimenting. And I'd like to share with you the recent results of that. Let me change the screen to share you that particular screen. So I hope you can see this. So what I've done is look at the post that might give you a bit more detail. So I've used the Steinway-Einstein stage analysis method to screen for stocks about 30-week moving average. But then on top of that, I've added my own individual preferred filters, 50-day moving average, EMA. And I've personally gone through the structural analysis of the stocks, choosing the ones that I feel comfortable with, and then added a few more indicators for short-term moving averages like T-line on the weekly, and T-line is the 8-period moving average on the weekly, and then on the daily as well. And on top of that, I've added the green dot as described by Dr. Vish, which I've detailed and put a link to the to his article in the blog. And I've shared the blog details in the description below. And also the orange line, green and black line. Green and black line is described by Dr. Vish, and orange line by Richard Moglen. I mentioned him and also the link for that in the blog post. So have a look. So I've subjected the screening process to multiple levels of filtering and ended up with these 11 names arranged here alphabetically. So these are the daily stocks. So the stocks that I'm filtered through the final filter, penultimate filter, because I'll be going through subsequent filter as well to choose if there is any tradable entry points or not. And that will change depending on individual traders, depending on your risk factors. And I can't advise you whether you buy or sell. These are more educational kind of setups. So I filtered here the stocks that has qualified for the previous levels and also have a green dot and an orange dot, either in the last day of trading or in the day before. So the day before yesterday or yesterday's trading. So ATEN, as you can see, it's above the key moving averages. It was in the uptrend, pulled back. And with an increasing volume, it pushed above. Sorry, let me make it a little bit bigger, giving us an orange line. Orange dot, green dot, the red dot. Orange dot is based on the MACD moving average and conversion divergence indicator moving up and also on higher volume. Green dot is based on the stochastics. Green and red black dots is based on the stochastic 1044 as described in Dr. Vish's article. I won't repeat it here. Have a look at that through the link described below. And these are present, and I'm expecting that this will indicate a new, at least a shorter term swing up move, as you can see beyond that, beyond the previous findings and indication. And it doesn't work better on the particularly the green dot. It works better only the price is above the I think it's 50 period moving average. So I have a particular preference for 50 EMA. So I don't take any swing trades or bigger positions below the 50-day moving average. So these ones have are all about the 50-day moving average. It doesn't work as much better at all if the green dot happened below the 50-day moving average, which is this, shown here with the red line. So ATEN, EOLS, it also broke about this horizontal resistance as well, right there. And it's got the orange and green dot here within the last couple of days. GO, same, the day before yesterday, it had orange and green dot, about key moving averages, high volume, and broke about the resistance there. GOGL, last day gave us an orange and green dot, showing the momentum is back in this name, as evidenced by MACD, volume, and stochastics. Halo, up move, pull back, and pushed above using the 200-day, the dashed line here as support, moved above the key moving averages, giving us an orange and green dot the day before yesterday. Joy, Journey Energy, it's a Canadian company as shown here by the suffix TO. There's a confluence of moving average and push above them, finishing strongly on high volume with orange and green dot together. METC, same story, 200-day moving average as support and finished above strongly about the key moving averages. Monster Beverage, it just closed about the 200-day moving average after finishing below 200-day moving average here on January the 14th. And ever since it stayed traded below it. And on Friday, it had a strong move to close above the 200-day moving average. So we'll want to see whether that follows through or whether it kind of fades away like the previous times it tried to move above the 200-day moving average since the latter part of 2020. But the additional momentum indicator here is there's the orange dot and the green dot on the last day of trading. And there's been multiple green dots here when the price traded around the 50-day moving average. And then the stock price moved above this kind of consolidation zone, indicating increase in momentum. SFL, shipping industry, strong up move, breaking above that resistant level there with orange and green dot on final day of trading last week with extremely high volume, which is very bullish. STKL closed above the declining 200-day moving average. It had a extremely big crash from the beginning of 2021. It crashed 73% from its all-time high and built a base since February for the last 3 months. And the bottom of the base is ascending here. And it had a strong up move with extremely high volume the last couple of days. And currently the price closed above the declining 20-day moving average, giving us a green dot, a black dot, and an orange dot in the last couple of days. It's a little bit extended from this base here, but nonetheless, it is showing some positive sign of momentum coming into this name, unlike its recent history. Sierra Wireless, SWIR, similar story of strong momentum coming to this name in the last 3 days, giving us this combination of orange and green dot in the last couple of days. If you zoom out to the weekly chart, it is still within this consolidation zone above the 200-week moving average, but it's closed quite strongly towards the top end of the trading range and within the last week, it has gained 25%. What you would like to see is it gives the more follows through, but also gives you a good trading entry point with a decent risk reward ratio. So that's what you would have to go through and identify if you have a good stop loss and risk reward strategies before you take any trade. You can't take all of these trades because some of them have 25-30% from its current price to the structural stop loss, and that's too big a stop loss position to take. So that you will have to kind of go through what is your strategy and which one applies to you to qualify for the next level of actually taking a trade or not. I'm still kind of fine-tuning my strategy and screening here. I'll be sharing this learning and the results as we go along with our members. And if you want to be part of this journey, feel free to join and continue to empower your trading strategies and skills with GrowWealth. As you know, GrowWealth aims to empower you to improve your trading skills, to invest better for a happier and richer life. I hope it was useful. This concludes this week's stock market analysis and the watchlist analysis. Any thoughts and comments, feel free to share. If you're watching this on YouTube, feel free to like, share, and also comment and subscribe to the video and support in any way possible. I have a blog in the Buy Me a Coffee server, buymeacoffee/GrowWealth. Feel free to check it out, support it in whichever way possible to sustain this channel and the blog. Happy to see you. I see you in our next week's video. Bye-bye.